pricing your bookkeeping and advisory services. Okay, so this is going to be big. This is where a lot of bookkeepers get tripped up, and I want to give you the tools that you need to be successful, okay, with pricing specifically today. Now, as I mentioned, I am Bill Von Fumetti, and I have a mentorship program called Booming Bookkeeping Business. If you're new, welcome. And I've helped over 3,000 people start and grow their bookkeeping businesses, with many of them doing well over 6 figures. So this channel is all about giving you the information you need to build the business of your dreams, okay? This channel will be talking about the 5 major keys to adding 6 figures of revenue, bookkeeping and advisory revenue to your business. We're talking how to generate leads. We're talking about how to handle consultations so that you can close more clients and for higher fees. We're going to be talking about pricing your services to maximize profitability, how to implement advisory services to your offering to really explode your revenue, and then finally, how to implement processes and workflows and people into your system so you can work less, make more, and live the life you want to live, okay? So we should have the businesses we want, but we should also have the lives we want, okay? So every Tuesday, we're going to be going live here on YouTube and on Facebook, in my Facebook group. So if you're watching this on YouTube and you're not in my Facebook group, just do a quick search for Booming Bookkeeping Business and join that free group, okay? In addition to doing lives in there, we do, I give you the help that you need to get your business started. Okay, I'm seeing SoCal Brian is asking, are you also going to save this live to view later? Absolutely. On YouTube, it will be just listed under the videos, and it will be in the Facebook group as well. So absolutely. And I will be going through, again, how to price your services properly. We're going to talk about the different types of ways that you can price your services, and then we're going to dive into that holy grail, okay? And then afterwards, I'll take questions. So if you're on Facebook, click the link that's in the description to enable comments so I can see your name and we can interact, okay? In YouTube, you can just go ahead and list a comment there. So let's just get right into it. Again, I've worked with over 3,000 people, helping them start and grow their bookkeeping businesses. Lots of them have existing businesses already. They come to me and they're looking for help on growing their business. And almost every single one of them is struggling to price their services properly. You know, I do a deep dive into their business. I take a look at their client roster and sort of what they're doing, the work they're doing, the clients they're working with, the types of services they're offering, and their fees. And 99.9 times out of 100, they are mispricing engagements. And if you've been, if you've had your business, if you've worked with clients, you've probably run into that situation yourself. I know I did. This is an evolution in terms of learning how to price your services. We're going to go through that evolution, but we've all been there. We've all done our best to quote an engagement properly, and didn't do that, didn't do as well as we could have. And the result, you could probably relate to this, is sometimes misery, okay? Spending a lot of time, excessive time, because we didn't quote this engagement properly and not getting compensated properly for it. And there is nothing, well, there are a few things more demoralizing than that. So, so this is really, really important information that we're going to be covering today. And if you can get your pricing locked in, it will open up a lot of new opportunities for you. Okay, you'll be working less, you'll be making more, and it will be a win-win for you and your client as well. Okay, let's not forget that. This is going to be a win-win for you and your client. It's not just, hey, let's maximize our fees for the sake of maximizing our fees. We're going to be talking about value here. Okay, so let's talk about the three ways that bookkeepers and people offering advisory services are pricing their services. And the first one, we all know this one, hourly. Okay, pricing by the hour. The second is flat fee pricing. Okay, flat fee is one price, one single price every month. Okay, and then finally, the holy grail is called true value pricing. Let's make that look more like an A. Okay, true value pricing. And you may have heard value pricing, that term, before. I know the first time I heard it, it was a little like, what does this really mean? I kind of get it, but like, how do you gauge value and all those different things? It was a little confusing. This is going to take value pricing and supercharge it. I'm going to call it true value pricing because a lot of what people are talking about out there when it comes to value pricing is not true value pricing. And so we're going to get into that today. Okay, so now let's start with hourly. Let's work our way to flat fee and then to true value. And the reason we're going to do that is because most of us as bookkeepers and advisors, we go through this evolution. Okay, we typically start here hourly because it's kind of the easiest to wrap your head around. And then you get a little bit of confidence and you say, okay, now I'm just charging a flat fee. I'm not going to track my hours. I'm not going to go through any of that. Flat fee I heard is great. And then true value is where we want to be. So I want you to be able to start there or jump from wherever you are now directly to true value pricing. Now, hourly, again, it's the easiest to wrap our heads around, but it is not in the best interest of our for our business or for the clients that we work with for a variety of reasons. Let's just talk about some of the hourly rates that bookkeepers, if you're in any of the communities out there, commonly realize. I mean, you see a wide variety of hourly rates from, $20 an hour, 25, maybe 50, 75 is a common one, 80, even 100. Okay, these are all, great fees. These are all great fees. Really, when you look at the average hourly rate of most occupations out there, you're doing pretty well, even if you're billing hourly, but you're not doing as well as you could, and you're not doing as much for the client as we could. For example, let's just talk about a real world situation. We have to understand the value that we bring to the table in order to price any of these fees. You might be looking at this and saying, well, a $100 bookkeeper must just be better than a $25 bookkeeper. And that's not necessarily the case. But I will tell you this, everybody who is doing a great job bookkeeping, being a great advisor, providing those services really, really well, is bringing a lot of value to the table. Okay, that should be the underlying theme of everything we do, is bringing that value, actually moving the needle in the client's business. And we can almost always quantify that. I'm going to go through an example a little bit later, but we can always quantify the value we're bringing to the table. Okay, let's say, for example, we're working with a client and we're charging them, let's say we're charging them $25 an hour. Okay, and over the course of the month, maybe we are spending, maybe we're spending, let's make it easy, 10 hours a month on their books. So that's going to be fees of $250, which is actually really on the low side. Again, whether it's hourly or flat fee or true value, you should be realizing hourly rates well into the hundreds. But let's just take this as an example on the low end. 10 hours, your fees for that client are $250, but you are doing good work. You're giving that client the information they need to make good decisions in their business. You're freeing them up to drive revenue, all of those different types of things. And as a result of having you might be helping that business owner generate an additional $50,000 in revenue. Okay, that's a big result, and we should always be trying to do something like that. In other words, driving a quantifiable result. Okay, the work we do, the services we offer, should be generating a quantifiable result. Now, let's say you're a really great bookkeeper advisor, and you develop or you leverage automation tools or put a system in place that allows you to be more efficient. Okay, that automates a piece of the process. You improve a process or you automate it, and it allows you to be more efficient. So now instead of spending 10 hours, you're spending 5 hours. Okay, so 5 times 25, that's going to be half that, $125. You're now spending 5 hours because you've implemented that automation, you've improved that process. So you're still able to deliver this value, but now you're being penalized for that. You're being penalized for being good at your job. Okay, you have improved their processes, you've automated things, and as a result, you're spending less time. And if you're billing hourly, you're being penalized for that. So that just doesn't make any sense. That doesn't make any sense there. What we should be aiming for is for our clients and our interests to be aligned, okay, to be fully aligned. And hourly doesn't make that happen, as you can see here. In addition, there are lots of other reasons why this just doesn't make sense. Keeping track of your time, tracking time, submitting it to clients, that's not a good use of your time, okay? It doesn't allow you flexibility to do things for the business that actually helps move the needle, okay? If you're tracking time, that's time that you could spend offering, advisory services, implementing processes, those types of things, okay? So the time you spent tracking is time you're not providing value to the client. And then again, there's no consistency here for the client. If they're getting a bill every month that's different, there's no consistency. It's hard for them to plan, okay? When they see those hours, the more detail you put on there, the more questions they have about what you're doing. It's just not a great setup, okay? So, but that's where most people start. If you're here, totally fine, okay? But let's get you over to true value pricing quickly. So hourly, no bueno, okay? No bueno. Flat fee. Now, flat fee has a lot of advantages, okay? One of the big advantages is that you can bill on the first of the month. Okay, with hourly, you cannot bill at the first of the month, and you don't know how many hours you're going to spend on that client. Okay, so you have no idea. Flat fee allows you to generate a fee, whatever that is. We'll talk a little bit about how those typically get generated here in a minute, but it allows you to generate a fee and then bill on the first of the month. Okay, you've heard that that's what we want to be doing, billing on the first of the month. If you're billing at the end of the month, especially if you do, let's say, it's January already. We're in January, you finish January's books, and January 31st or February 1st, you send the invoice to the client. Hopefully it's due on receipt. But you shouldn't even be sending invoices anyway. But hopefully it's due on receipt, but if it's net 30 days, now what you're doing is you're financing their bookkeeping. You're financing the bookkeeping for your clients. The flat fee allows you to bill at the beginning of the month for that month's services. Okay, you want to bill on the first of the month. We're not in the business of financing operations for our clients. Okay, and bookkeeping is part of that. Bookkeeping and advisory. So we want to get billed the first of the month. We don't want to be chasing AR and spending a lot of time trying to collect from clients who are having cash flow issues. Okay, it's no different from attorneys who get paid up front, a retainer. This is professional services we're offering here. So that's one of the big benefits here. But when it comes to generating a flat fee, most often what a bookkeeper or advisor will do is say, they'll look at the books, they'll look at the client's books, they'll talk to the client, get an idea of the scope of the engagement, and estimate how many hours it might take. Okay, maybe this engagement will take 10 hours a month. Okay, so 10 hours, and I really like to be making $100 an hour. That's what I really like to be doing. Okay, so $100 an hour, and we get to $1,000 flat fee. Okay, great, right? Well, again, we're basing things on hourly. Even from the client's perspective, they don't see the hours that go into it. They just see this, which is good. That's a benefit. But we're still just basing everything on hours. Okay, now we're going to want to track hours to make sure we're profitable here. But we don't have any flexibility to add value to the client. Okay, so again, flat fee is hourly in disguise. Okay, flat fee is hourly in disguise. And again, you're making a lot of assumptions here. You're making a lot of assumptions on how much time it will spend, and you're just applying some random hourly rate to it. So the last word and the kind of the nail in the coffin on flat fee is that when you provide this fee to the client, when we talk to the client, we have that consultation, we gather as much information as we can, and then we present this fee to the client has no context to determine whether or not this makes sense at all. You know, we might have talked about their needs and their pain and their goals and things like that, and then we say, okay, well, for us to handle your books, to get you the information you need, it's going to be $1,000 a month. We are now we're now putting we're putting it on the owner to determine whether or not they see value in this. Okay, and that is a very difficult thing for business owners to do. If you've talked to, had enough consultations and talked to enough business owners, you're rolling the dice on whether or not they see what you do as being valuable enough to invest $1,000 a month. So it's just really, really tough to justify that to the client. Okay, so it's really just based on hourly, and that's a challenge to justify. So so that's flat fee. If you've moved to flat fee, that's still great. I went through this evolution myself. Okay, I started hourly, I went to flat fee, and then true value pricing is really where you want to be. That is the holy grail. And let's get into what true value pricing really means, because again, you've probably heard about value pricing and you're hearing a little bit of misinformation out there. True value pricing is pricing your services based on the value you create. Okay, that's the key word. A lot of times when you hear conversations surrounding value pricing, it's referred to as the value of your services. Okay, the value of your services, which is similar, but true value pricing is determining the amount of value in dollars that you're able to create for a client and then basing your price on that. And I think the reason that a lot of people who talk about value pricing don't go that far with it is because it can be challenging sometimes to quantify, to have those discussions with clients to determine a dollar figure, okay, that you're going to be able to generate for them. But that is what you want to do. That's the holy grail. That's the holy grail of pricing. Okay, so whether it's bookkeeping, whether it's advisory, tax planning, that's where you want to be. Okay, and because the fee that you're going to create, and we're going to go through an example here in a minute, the fee that you develop, okay, that monthly fee is always going to blow these out of the water. It's always going to be more in every single scenario, because keep in mind what I said a little bit earlier, there is big value in what we do. There's just tremendous value in what we do already. If we can put a number on that and then base our fees on that, we're always going to exceed these. And these, again, are based on how much work is involved, hours you have to spend, those types of things. So we're always going to be realizing higher fees. We're always going to be still accounting for the amount of work that needs to be done. And again, it's a win-win for us because we're going to create that value for the client. We're basing our fees on that value created. This is a win-win. This isn't raising fees for the sake of raising fees. Okay? So this is this essentially puts, you and the client on the same page. Okay? You both want maximum value. Clients, at the end of the day, remember, they're only concerned about one thing. They are concerned with whether or not you can solve their problems to help them reach their goals. Okay, that's it. So they're concerned about value. All right, so they're concerned about value. We're concerned about creating that value, because if we can, now we can base our fees based on that value that we can create. So let's talk a little bit about how this is actually implemented. Okay, which, by the way, it's still a flat fee. Okay, it's going to still be a flat monthly fee. It's not going to vary, but it's going to be based on value. Okay, so we still get the benefit of being able to bill on the first of the month, the benefit of clients knowing exactly what their budget looks like in terms of bookkeeping and advisory fees. So there's a lot of those benefits as well. But let's talk about true value pricing, how to implement it. And let me back up and address something that a lot of you have probably seen out there and maybe even utilize some of these things. In fact, we utilize it in my mentorship program, which is a pricing calculator. Pricing calculator. Okay, and I kind of put it here in the middle because a pricing calculator, it's great. It's a really great tool when you get started, and as you start kind of developing these skills, it's nice to be able to lean on something like that, a pricing calculator. So I provide one for people in my program, but True Value allows us to shake those training wheels, okay, and it rise even further above that. But pricing calculators, and I know there are some tools out there, some software tools that will help you price engagements based on different factors and things like that. It's a glorified pricing calculator. It's nice because what it does is it does develop you a fee that is based on the inherent value of providing bookkeeping services. Okay, just by providing bookkeeping services and nothing else, just processing the transactions, you are bringing value to the table. Okay, so the business owner doesn't have to do it. They're able to focus on generating revenue. You're giving them just better information so that they can make better decisions. There's inherent value in all of that, just doing those things. And so a pricing calculator can come in handy to determine the inherent value of what we do. But what we want to do is, it's a great place to start, but as you start to grow and evolve and offer higher level services, you really want to start putting the number on the value, not just the inherent value of what we do, but we want to talk specifics with clients. Okay, we want to talk specifics with clients, generate actual dollar amounts that we're going to be able to create for them and price based off that. Okay, so now, in order to do that, in order to implement true value pricing, there is a prerequisite. And you have to have determined, you must, number one, determine the real problem that a client has. Okay, when you're on a consult, this happens on a consultation call. Okay, is that you have to determine the real problem they're having in their business. Needing a bookkeeper is not a problem. Okay, wanting to make more money is not a problem. We want to be very, very specific. So when I say the real problem, I want to be very, very specific, okay, about what problem is holding them back in their business, okay, from reaching their goal. I want to determine that real problem. Is the real problem that their gross margins are lower than industry standard? Is that the problem? Because that's an actual quantifiable problem. That's something that we can dig in and apply a dollar amount to. Okay, how far off are we, and what would that mean to fix that problem? So you've got to find the real problem. That happens in the consultation. And then also in the consultation, you want to find out how much that problem is costing them. How much that real problem is costing them, okay, in either added expenses or missed revenue, those types of things, okay? And so the best way to illustrate this is through an example. And Deborah in my mentorship program just had this happen to her, and so I'll use that as an example. But she was on a consultation with a wedding planner, like a wedding event planner. And she did a really great job of finding the real problem. The real problem for this particular client was that business was great, business was booming, but she didn't have enough time to be working on her business. She was working like 2 or 3 days, like 2 or 3 full days a month on books and invoicing and bookkeeping type tasks. Okay, so she determined that real problem that she was spending, and I think in this example it was 2 days. She was spending 2 days a month on bookkeeping. Okay, when she should have been generating revenue. And Deborah then asked, once she asked the series of questions to determine, because this conversation started with, mind you, I'm looking for a bookkeeper. I need a bookkeeper. Okay, but that wasn't the real problem. She kept asking questions to determine the reason she needed a bookkeeper was because she was swamped and she was overloaded. And then, which is great, but let's get more specific. Well, what do you mean by being overloaded? How much time are you spending on your books? 2 days. Okay, so it's a series of questions to get very, very specific. I will go through, in another video, I walk through how to have that conversation in terms of determining the real problem, asking great questions. But that's what we want to do, and then get specific. We got to 2 days, and then assign a cost to that. The question here is the real power question is, okay, with 2 days a month, how many additional events could you book with 16 hours of time a month? And she said, I could book an additional event every month. I mean, 16 hours is a lot of time. I could put that to use when it comes to marketing and generating that revenue. I could probably book one new event. And then the question is, okay, well, that's great, but let's assign a dollar value to it. Okay, what are your average fees for an event? She said $6,000. Okay, now we've got the information we need. $6,000 is what she's missing out on because she's spending 2 days doing her bookkeeping. So she's missing out on $6,000 if she weren't doing that. That translates into, over the course of a year, and I'll write it over here, $72,000. Okay? $72,000 is what this problem, not having a bookkeeper that's freeing them up, giving them good information to make good decisions about their business, that's what it's costing them. And on our weekly coaching call, Deborah described that as like an aha moment. Okay, you can hear that happen on the phone when you're doing these consultations, is you can hear that aha moment when business owners see how much their problem is actually costing them. This business owner should have $72,000 in their bank account that they don't because they haven't fixed this problem. Okay, so now what we've done is we've done what's called dropping a price anchor. Okay, this is an anchor. Okay, we've got them focused on the $72,000. Who wouldn't be excited about generating $72,000? Or just flipping a switch, hiring me, a bookkeeper, an advisor, whatever, flipping that switch and turning on $72,000 of revenue. Everybody would want to do that. Okay, that's mandatory. That's mandatory. And when I say anchor, that's the first number they see, and that's what they focus on. Okay, so our fees are going to come later. This is the number that they're going to focus on. So this anchor is really, really important, and it's mandatory. Okay, to do true value pricing, you have to get a specific number. Okay, we're not just asking scope of the engagement and what their current processes look like and those types of things. We're actually getting specific, and you can do this with every single client you meet. As long as you're able to ask the right questions to determine the right problem, you can then assign a cost to it. Okay, and the cool thing is, if you've noticed this, I just asked questions here to get to the real problem. I just asked questions here to assign a cost. She told Deborah the $6,000. She told Deborah she could book one new event. Okay, so the client has told us this information. We've gotten the client to tell us, I have a $72,000 problem, instead of us telling the client. When we tell the client something, they hear it. When they say it, they believe it. Okay, so the power of asking really, really good questions, you've got to get that cost. You've got to get that anchor. You've got to develop it to do this properly. So now, when they see this value here, it's very simple. So most of the work, as you can see, happens on the consultation. And I have another video where you can, again, see how a consultation should be handled. That happens on the consultation. The actual pricing now is going to be based on that $72,000. Okay, so you can use a percentage range if you want. Most often, we're looking at something in the, can you see this down here? Yeah, 15 to 25%. Okay, 15 to 25% of this number. That's it. That's all you're doing. So in this case, I think it was $1,500 a month, which is a huge fee for this client. If it was priced flat fee or hourly, it would have been way less than that, okay? But we've been able to increase our fee by showing the specific value we're able to bring to the table. That's a huge fee for that client, and it's 25% of $72,000, and that's it. So when we talk about pricing, when you really think about it, that's actually the simplest. True value pricing is simple. The pricing component of the whole process is just multiplying a couple of numbers together. That's it. But the groundwork needs to be in place. Okay, the foundation needs to be solid in terms of handling that consultation properly to get the real problem, bring that to light, and then assign a cost to it. How much is that costing them? Okay, so that's got to be done. When you do this process, what you're essentially saying to the client, and I've actually said this to a client on the phone, but what you're doing for a client is that they're buying money now. They're essentially buying money. You've got a box full of $72,000, and you're asking them to, what is that, $18,000? You're asking them to pay you $18,000 to give them a box with $72,000 in it. Any business owner in their right mind would do that every single day of the week. Okay, as long as you do these two things properly. These two things. This is the foundation for everything else to work. Okay, once you do that, now your client's excited. They're excited about where they're going to be. They're excited about that $72,000. Everything at that point starts to become an afterthought. Okay, if you knew that really well, your fees are going to become an afterthought. Okay, so the buying money is a powerful concept when they start to see that, when you walk through this with them, and they'll also see that they're focused on this number. They're not focused on this number. They don't say, oh boy, it's going to cost me $18,000. Jeez, which is what you're doing here. This was $12,000. Boy, it's costing me $12,000. They're saying it's costing me $72,000 not to be working with this person. Not to be working with this person. That's a powerful shift. Okay. So, and then a final note on true value pricing is that, because you might be saying, well, Bill, you didn't talk about, what's involved and how many transactions they have and all of that stuff. Well, that stuff kind of gets factored into these things here, right? How many hours I'm going to have to spend, let me estimate that out. That's all captured here. This, now, again, you're able to raise your fees above anything you could do here because now we're focused on that value. And so now we have taken into consideration a lot of things. The scope of the engagement, how much margin there is, unforeseen circumstances when we get into their books and we see some things that, okay, this wasn't really how it was represented. All of those things, now there's wiggle room for that. There's wiggle room for that because our pricing, when you use true value pricing, is always going to be so much higher than these two, okay, than pricing in any other way, based on transactions, based on hours, based on amount of work. It's always going to be higher because that value that you bring to the table is always going to be sufficiently high, okay, always in every case. So I close deals all the time. In fact, I can't remember the last time I asked how many transactions they had on a consultation or how many invoices. It's all based on value, okay? So it leaves huge room for margin there. Margins are huge. Also, what this allows you to do is it allows you to outsource this work, okay? Become a CEO, become the entrepreneur that you want to be, which is, hey, if you want to do the work yourself, that's fine. Okay, you're going to end up making, multiple six figures here working less than full time, and that's a great result. But we have a lot of people in my mastermind and my other programs who are doing multiple six figures and they're doing hardly any work. They're just working on the business development side of their business, generating leads, closing deals. And having such a huge margin allows them to do that. You can bring on outsourced bookkeepers and people to implement the work. Okay, so what I want to do is, if you have questions, feel free to type them into the chat, whether you're watching this on YouTube or on Facebook. If you are watching it on YouTube, I encourage you to join my free Facebook group. Okay, if you go to Facebook and just search Booming Bookkeeping Business for groups, you'll see that. We go live every Tuesday. This is broadcast both on YouTube and in the Facebook group, but we also do other really cool things in the Facebook group, other trainings and things like that. But what I'd like to do is, if you have comments or questions on this, drop them into the comments on whichever platform you're on, and I'm happy to stay on for a few minutes here and walk through some things, because I know it took me a few times seeing this to start to put it together and to start to really understand the power of doing this. This, I should mention, again, this is, you can see how like your revenue just starts to explode and expand and starts to free you up over here. But it happens on the consultation. It happens on the consultation. And once you get really good at that, and what we do in our programs, and you can do this at home, role play. Okay, role play. Watch the video that you'll see on handling consultations, the right way to ask questions to determine the real problem, how to assign a cost to that, how to get the client to assign a cost to that. You do role plays, and you get really, really good and confident at asking good questions. The first time I tried this, oh my gosh, forget about it, okay? I slaughtered it, but I didn't have any help. I didn't have anybody telling me how to do it. But it's something that you can really, a skill you can really develop when you get on that consultation. You will get to a point where you're just like, hey, put me in front of a business owner. Put me in front of a business owner, and if they've got a real problem that I can solve, that's valuable enough. Some business owners, they're small. They don't have the problems in their business aren't they're just getting started. If you're getting started, our capacity to help you is probably a little bit smaller than somebody who's up and running, and they've got kind of a $72,000 problem to solve. I've had numbers be in the millions of dollars that I've been able to help people. Okay, now I won't do 25% of that. I'll be a little bit more reasonable when the numbers get crazy like that. But $250,000 of added value creation is not uncommon. Okay, but you get in front of a business owner with a problem that makes sense to solve, and it's a valuable problem to solve, you'll close them every time. You'll just want to get in front of as many people as possible. And so you'll see other videos on lead generation as well. Okay, so that's kind of where things start. Generating a constant flow of prospects so that you can pick and choose who you work with. When it comes to those small clients that are just getting started, a lot of people say, well, how do you do true value pricing for those clients that are just getting started? They're small. And you've got two options. Number one, don't work with them, okay? Get your lead generation dialed in so that you've got so many people in your pipeline that you pick the ones you want to help, okay? You pick the ones that have valuable problems to solve. That's how you do that, okay? And it's very simple. There's so many businesses out there that, well, no business is in a perfect situation, okay? No business owner is like, yep, everything's perfect, everything's great. Every business wants to grow. Even if things are running really well, they want to grow, they want more, whether it's more income, removing themselves from the business, they always want more. So there's so many businesses out there that need that. Focus on those, okay? Don't work with the small ones, okay? Filter those out. Alternatively, you can still have this value conversation. Now, instead of talking about how much this problem is costing them because they're just getting started or they're small, is, okay, where do you want to be in a year? What do you want your revenue to look like? Okay, so now that cost is more of a goal, okay? And they might want to hit $500,000 of revenue in a year, which is a lofty goal. Okay, great. I can help you get there. I can develop a plan to help you get there. Okay, and now you can base your fee off of that. 15 to 25% isn't going to cut it. You're probably going to be looking at more in the like for like this $72,000 client, for example, 5 to 10%. that's something that that is on the more reasonable side for a financial partner to walk them through the entire process. Okay, so you can either adjust your your percentage, or you do the preferred and the best practice. If you really want to scale and have a business that provides you with everything you want, both financially and in your personal life, you will just get your lead generation dialed in, so you don't work with you don't have to work with small clients. You don't feel like, boy, I know they're small, but I don't, a couple $100 a month is better than nothing. You won't have to worry about that as long as you get your lead generation dialed in. So check out those videos. All right, cool. I don't see any other comments coming in. If you do have any comments, this video is going to stay up on YouTube and in the private Facebook group. If you're not in that, check out that private Facebook group. And comment there, and I will get back to those as well. Okay. Let's see. Anything else we need to cover? Final thoughts? I don't think so. All right. So look, if any of this, if you identify this and you have a business that's generating some income already, you've got a bookkeeping business and you're trucking along, but you feel like you need some help when it comes to pricing, generating leads, handling consultations, providing advisory services, or implementing processes and workflows and adding people to your business to scale to the moon. If you feel like you need some help with that, it's what I do. I've helped over 3,000 people do it, and we've got a couple hundred multi-six-figure bookkeepers in the program. If you're interested in something like that, there is a link under the YouTube video where you can book a call with me. Okay, where you can book a call. We'll talk about whether or not I can help you in your business. That's under the YouTube video. If you're on Facebook, you can it's boomingbookkeeping.com/apply. Okay, boomingbookkeeping.com/apply. Okay, for if you feel like you want to talk about whether or not I can help you in your business. This is for those who are already bookkeeping. You're great at bookkeeping, your advisory services, you've already got clients, you're already moving. Okay, it's not my masterminds and high level coaching programs are not for beginners. So let me know if you check out boomingbookkeeping.com/apply if you're interested in that. Wesley says suggestions for beginning pricing percentage. Again, if it's a new business or a very small business, something in the 5 to 10% range of the value you're able to create. Okay, so what's that? 5% of that, 10% is $7,200, and 5% would be half of that, $3,600. That's $300 a month for a new business. Absolutely makes sense. Okay, $300 a month would absolutely make sense. So Wesley, that is for if a business is just getting started. Okay, cool. So I will wish you all a great rest of your Tuesday. Have a great week, and we'll see you again back here next Tuesday. Take care.